In this video, we're breaking down the top 13 market movers set to soar in the coming months. There's cybersecurity, digital health, and even a retail stock. And we're going to break down the key growth drivers, and you will be ahead of the curve going forward. We're going to break down the market, where it's at today, what it looks like moving ahead, and then we're going to jump into the live trades on the trade platform. Do me a favor and smash that like button down below. I really appreciate it. It helps out the channel. You're certainly welcome to subscribe as well, and download the free options workshop in the link below. If you're new and learning options, it's a great overview, very attractively priced. If you just want to level up your game, if you're an experienced trader, it will help you with that as well. The S&P 500 ended the week at 6481, up over 2% from last month and 19% from a year ago, continuing a strong upward trend supported by broad technology and AI sector gains. The index remains near record highs after sustained growth driven by economic resilience. As far as the U.S. economy, it grew 3.3% in Q2. That's above expectations, fueled by increased consumer spending and reduced imports. Inflation remains steady, supporting Fed cautiousness. As far as interest rates, the Fed maintained interest rates at 4.25% to 4.5%, signaling a pause with a possible rate cut expected in September. Easing inflationary pressures and economic data are going to allow for that. There is an 89% chance right now of a quarter-point cut on the 17th when Fed Chair Powell speaks. If he cuts a half point, the market may move up more. Fear and greed index right now is at 53, so it's indicating moderate to neutral optimism among investors despite the high market valuations. That's where I want to be careful right now, is it's still valued high. The Buffett indicator and Shiller PE ratio, the Shiller PE is 38. Both are suggesting the markets are strongly overvalued relative to the fundamentals, and it really urges cautious positioning despite the positive price action. All right, guys, here we are on the Tasty Trade option trading platform. You can trade stocks here too. There's a link down below. Check it out. It's my favorite platform and super intuitive, and there's some benefits if you go through my link. So let's start out. There's some great stocks this week. We're going to go through them pretty quick, but I've got a full breakdown. Adobe is the first one. These guys just keep putting up numbers. They've got rising AI adoption. They're talking about Google Gemini AI as competition, but you know, I don't see that as a big factor. They just keep killing it with the numbers. The key is last quarter they had Q2 revenue growth of 5.87 billion, up 11% year over year. And the key thing that you want to look for is the ARR, the annual recurring revenue. So they have a great recurring revenue model. I'll be honest with you, what I don't like is this downtrend in the stock. But again, how low can it go with their numbers? I mean, look at this balance sheet and income statement. Annualized income statement, super strong fundamentals. The ratios, look at this, 90% gross margin. And then if we go and we look at Yahoo Finance, I like to use just to look at the last 3 quarters. They kill it on earnings. I think they've hit like 12 or 13 continual beats. So it's awesome. They're trading at 348 right now. My target for Adobe is much higher. It's 500. And you look at their growth estimate, 12% again next year. So they just continue to kill it. And what do we have on in Adobe? I think put credit spreads, but let me just look. Yeah, I just got one put credit spread. It's trading at 348. We're at 340, 330 put credit spread. If we go to the trade page, this is what I like. I'm going to go to the regular option chain only. And what we've got, they've got earnings on 9/11. So that's why I'm waiting to roll. I'm still in the positive on it. You can see right here. We can go down to 340 and we collect this, whatever's left in extrinsic. And you can see that right here, $400 in extrinsic. If there is a pullback, although valuation is so low, and good right now. I don't think there will be, but this will profit right away, and then I'll just roll. I'm still long to 500 to next month. So love Adobe setup right here. Applied Material is one I'm going to put on Monday when the market opens. I'm looking to collect almost a third the width of the strike and do a 150 or 160, 150 put spread. Applied Materials is going to benefit from the U.S. CHIPS Act going forward. They're expanding in Texas. There's strong demand right now for foundries. They're super strong company with 11% year-over-year growth rate. And I like the technical setup. It's near lows right now, bottom of the Bollinger Band. So here I've got the white Bollinger Bands, and then I've got the 50-day moving average in green, and in red, the 200-day. And I really like Applied Materials. I'm putting on a put spread Monday at open. AMD got killed last week, and the reason, I got to look into that more, but you know what? I don't care. They've got MI350 and MI350 out now, MI400 coming out next year. I've got 4 leaps. I actually, on Friday when it was down, I just doubled down. I just put another leaps and poor man's covered call on. I had closed out my calls previously, so I just put on a new leaps. I did the 150 and then sold the 165 short call against it. But AMD right now is a gift on this little pullback, but we've still got the 50 trending above the 200. Last quarter, they beat, they've got 26% year-over-year growth. So this is a no-brainer for me. If you look, 3 beats in a row on earnings and strong buys. That earning per share is going up. Growth estimates, wow, they've only got one. Oh, wait, we're the wrong stock. AMD I need. Wait, I've got AMD right here. Okay, so they missed in Q2. Okay, that was the MI308 due to that and the restrictions put on China. So I don't really look at, I looked at as a one-off. But if you look at the growth estimates, 54% next year. Look at the stats right now for these guys. The PEG ratio is 0.47, price to earnings to growth. That's extremely low. And they've got the MI400 coming out, and MI350 numbers are going to hit this quarter. The PE is 25, so very undervalued right now, in my opinion. And you saw what I had on, but it's poor man's covered calls going forward. And I'm long right now. I closed out some of my calls, so I'm going to wait for a move up. It was down 6.5% on Friday. All right, the next one, Cake. Love these guys. Trending up and super strong numbers. What do I have on Cake? 65.55 put credit spread. And you can see this is what I like about Taste to Trade. It can pull back to 65. It's at 60 right now, so we're just outside the profit zone. But I like the setup here. And let me show you the numbers for these guys. 3 beats in a row. They just continue to put up numbers. 10% plus earnings growth next year, and they've got Flower Child and North Italia, 2 brands that are opening up and expanding. Their pegs at 1.22, forward PE at 14. So love Cake moving forward. Now let's see. Next one, CrowdStrike. Cybersecurity, a lot of spending in that going forward, and we've had a pullback towards the 200-day moving average. The deal with CrowdStrike, they're at trading at 417 right now. My target for Crowd is, let's see what it is, 480, so quite a bit up from here. And they had Q2 revenue of 1.41 billion, so that's 33% year-over-year growth. Their ARR, annual recurring revenue, they've got that model again. Love recurring revenue model. They did 6.5 billion, so that's 32% up year-over-year. So huge growth stock going forward, and the pullback is a gift. And let's look at Crowd's numbers, continual beats on earnings, and what really stands them up, makes them stand apart is the 29% growth rate. And the stats, let's look at where they are. They've got a fairly high PE. Yeah, 117, it's up there. And PEG 4.72. But you're paying for that growth rate. But love these guys. And I think I've got put credit spreads. I might have a poor man's covered call. So my bullish strategies are poor man's covered call. That's a leaps. And then selling the call against it, as well as put credit spreads, 420, 410. Okay. All right. There's my daughter. Hello. Okay. Okay. Stop. All right. So love CrowdStrike going forward. She threw me off. Okay. e.l.f. is the next one. Trading at 133 right now. And 133, 5 IVR just broke we've got the 50 going above the 200. And they bought Rode recently. Hailey Bieber endorsement, and she's got a huge social following. So that's going to hit and help the numbers going forward. Last quarter, they did 338 million. So that's 30% year over year growth. Super high growth rate company. I think e.l.f. is going to kill it going forward. Let's look at what they've got. So they missed a couple in Q4, but they beat the last 2 quarters. They made that acquisition, and they've got 25% growth next year. So love e.l.f. going forward. All right. Google, I just did a video on. Check that out. It had a big move up, so I did a iron condor. But let me know your thoughts on Google as well. And tell me in the comments below, let me know which of these stocks I'm covering you like the most. All right, HIMS is another one I think is a great buy right now. We had a pullback. We're near that 200-day moving average, so we're at 48. I had sold when we were up here, so now's a good time to buy. I mean, long term, HIMS is great. Their key differentiator is their direct-to-consumer model, and they've got recurring revenue. Again, the subscription. Their brand's extremely sticky. They've got a telehealth platform, and they're focused on personalized wellness, so dermatology and men's health, hair products, erectile dysfunction, and some other products, but and weight loss drugs as well. And last quarter they had 40%. They had revenue of 372 million. That's 47% year-over-year growth. Unbelievable. And their subscriber growth was 1.9 million, 39%. So high growth telehealth disruptor, and their key is going to be just scaling, continuing to scale and meet the numbers and their margin. So I love HIMS going forward. And I have a poor man's covered call. So I just sell calls against it. And my strategy with poor man's covered calls is buy that deep in the money call on a down day, a leaps option. And then I sell a call against it short term. And with the premium that you collect from that short call, you can typically, if you do that every month, you can pay off that leaps option in 6 months, less than 6 months, and then you're controlling 100 shares of stock for free, basically going forward. So I love that strategy. HIMS I like. Lilly I like. I'm not covering that one today, but love that as a drug stock as well. I've got a poor man's covered call on. All right, Meta, I'm putting a trade on Monday. I've got this above the market, but I'm going to collect a third the width of the strike and do this 730, 720. Super strong going forward. Meta's a giant. They they're using AI, VR adoption. So that's going to be the key, is their performance and the VR adoption that happens in the market. But I mean, they're a beast. So love Meta. You can see the and then if we look at, let's again look at HIMS constant beats, Meta beats target for let's see what they have as the target. 750. It's probably about where it's at now. No, they've got an 863 target. So the analyst ratings have a high target for Meta right now. Wow. Okay, MicroStrategy's 5-year. So they had a bit of a pullback. This is the biggest owner of Bitcoin. Their key largest corporate holder of Bitcoin. So it really just follows the price of Bitcoin. And Michael Saylor that leads it he's been right for a long time. So any pullback in Bitcoin, I'm playing it with. I've got some Bitcoin and I've got MicroStrategy as well, but it almost depends entirely on the price of Bitcoin. So there it is. So I've just got 2 put spreads at 365, 355. So I'm under right now, and it needs to move up, but I like it right here. And there's more institutional adoption and regulation is leaning towards the U.S. being a leader in Bitcoin. So that's what I like about it. All right, ServiceNow, love their CEO. They've got what they do is an enterprise cloud platform for digital workflows and automation. Their key differentiator is the strong AI focus and workflow automation integration. They've got mission critical software. So they work directly with financial institutions and a lot of different verticals and help them change their numbers and their revenue and just conversion. So their CEO is a super smart guy. Love him. I should know his name, but he wears the dark sunglasses on TV when he's interviewed. But sharp, and they continue to just kill it on the numbers. And I like ServiceNow. What's my target? I'm trying to look what my target is for ServiceNow. I've got an 1150 target, and right now it's trading at 914. So for me, that's a bargain right now. We're right at the profit zone, 914. I'm still in it. And I'm in October with my put credit spread. So love ServiceNow. They've got 22% year over year growth going forward. So all right, what's the next one? I like Palo Alto. We already covered CrowdStrike, but I like them as well for cybersecurity. Moving forward, and then SoFi, of course. SoFi and Supermicro, those are the last two. SoFi, incredible numbers. Let's look at what we've got in ServiceNow. You can see the beats. Supermicro, okay, we'll do SoFi first. Three beats, continual revenue growth. I've got poor man's covered calls on 4 of them. We had to move up to 25, so it is a little bit high right now. So I'm not, typically I'll have 10 or 15 of these poor man's covered calls on. So I'm a little light right now just due to the market being at a high valuation. But with the rate cuts coming, that should really help SoFi. Their key differentiator, they're a fintech, and they've got a broad market suite. But really, the marketing and their subscriber member growth is huge, and they've got multiple revenue streams. They've also got partnerships for blockchain as well, and growing platform internationally in Latin America, Canada, and Hong Kong. So love them going forward. And then the last one, Supermicro. I've got 3 leaps and poor man's covered calls against them. And these guys are the leader in AI cloud enterprise workloads, providing liquid-cooled servers, and they are the leader in that. So they've got partnerships with NVIDIA, AMD, Intel. They're within that ecosystem, and they've got a huge backlog and 65% year-over-year growth, and we've got a track delivery of the NVIDIA, the new Blackwell, and AI adoption moving forward. But as the data center grows, Supermicro's going to grow, and they're super high growth. They're a bargain right now. So let's look at the numbers for Supermicro. They missed last quarter. Let me see what the reason. Missed due to customer spec changes. Not a concern for me at all going forward. So I think that was a one-off, but they're going to continue to do well moving forward. All right, guys, remember to like and subscribe down below. Download the free options workshop. Check out the paid course. Leave a comment, ask a question. Let me know, of these 13 stocks, which are your favorite? 13's kind of too many. So, hey, give me your top 2 or 3. And if you like this video, be sure and watch this next one.